Hi, David Bassanese here, Chief Economist at BetaShares. This is a snapshot of my latest market trends report. And just reviewing the month of November past, really the big story of the month has been the sharp decline in bond yields. US 10-year government bond yields, for example, down 0.61%. To 4.3%. Australian bonds declining by 0.5% to 4.4%. So it's been quite a turnaround after a few months of sharp bond yield increases. Now, why has that happened? I think a few things. Firstly, ongoing signs of disinflation in the US economy. The consumer price index surprising on the downside again. So we're seeing, again, further encouraging news on the inflation front in the US. Inflation is still too high. But is still moving in the right direction. And we're also seeing more signals out of the US Federal Reserve, the various voting members on the Federal Reserve Board, hinting that they may be done in terms of raising interest rates. Markets have quickly moved to price in what is now pretty aggressive interest rate cut expectations in 24. So all of that has contributed to a decline in bond yields, which has helped equity markets. So the global equity MSCI All Country World Index returning 8.1% in the month. The ASX was up 5%, not as good, but still not too bad. REITs in Australia, the listed property sector, which has been very sensitive to bond yield movements over recent times, up a very strong 10.9% after several months of weakness. Good equity gains on the back of declining bond yields. Also, bond returns, as you would expect, were positive in the month. So global and Australian bonds returning something like 3%. In the month. So a healthy return after a few, let's say miserable months in the bond market again with some negative returns. That's pretty much it for now. If you'd like to see full details of my market trends report, and it is quite a detailed report these days, please visit the insight section of our website. Thanks for watching, and I'll see you again next time.